Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets. This edition of Moving Iron Podcast is brought to you by Dawson Tire and Wheel, your premier ag tire and wheel provider in North America, helping people grow. TractorZoom delivering insights, and Dryshod Boots, the official work boot of the Moving Iron Podcast. This is a special edition here. I got Chip Nellinger on here from Blue Leaf Ag Marketing, and Chip is typically on Sundays, but we wanted to get him on here this Friday so we can talk about the cool stuff that happened in the market today as far as the reports go. So you had two big reports come out, Chip. You had the weekly export report, and then you also had the crop condition report that came out as well. So USDA did roll back the yield estimates a little bit, and the markets did respond very favorably to that. So I guess, Chip, give me your reaction to what you saw happen today and a little bit of your thoughts on the trade overall.
Yeah, absolutely. Yeah, it was quite a day, quite a week. The bean market just is relentless rallying. And, the numbers came out about as expected, quite honestly. And the market had rallied pretty significantly going into this report, both corn and beans. We rallied $1 plus in the month in beans in the month from the August report till today. So some of that was in anticipation of this hot August and dry August, cutting bean yields back. China's been buying beans almost every day. That's been good. And the funds are just on a massive tear. They just buy beans. If the market's open, they're buying beans. It doesn't matter. Overnight, in the morning, in the afternoon, as long as the market's open, the funds are buying beans. And these numbers at first glance were about as expected. Given the rally, I feared that we were maybe shaping up for the opposite of last month, where we got bearish news last month, but because of the dry conditions, the market rallied. And I was fearful that this month, since we'd rallied so fast into this report, that we'd see the cut in yields and the cut and carry out, and then the market would correct. But the bean market doesn't show any signs just yet that it's ready to put a correction in. Let me just pull up here.
While you're pulling that up, talk about that a little bit, because the soybean market's the one that's been getting kicked around the most. Is it because of so much China coming to the table and buying stuff? Is that driving that, or is it what's your thoughts on why that's such a big deal now?
Yeah, it's China, and they literally are buying millions of bushels a day. And it's almost every day on a daily basis. They're buying, between 10 and 18, 19 million bushels of beans. And that's been, I can't even tell you, 18 of 20 days, something stupid like that.
Oh, wow.
And the bean market itself has rallied, well, by now, the close today, I think it's about $1.20 straight up, and it's closed higher. I think something like 12 of the last 13 days or 13 of the last 14. I'm not sure, but it's a pretty straight up move. And, the thing about it is, and these numbers here, they came out at 178.5 on corn yields. The average estimate right here is 178.3. So the market did a pretty good job of anticipating this. 51.9 on the beans. The market was expecting 51.8. So while it was a cut, it was 3.3 bushels lower on corn, 1.4 on beans. They didn't do anything on bean demand. So, part of this is the market anticipated, the USDA even anticipated some of this China buying, and we have greatly increased our bean demand numbers compared to a year ago already. So some of this is baked in. At this stage, they didn't see a need to go higher on bean demand. They went higher, I believe, by 75 million bushels last month on exports, but they left everything the same this month. And they did increase corn exports by 100 million, but they decreased ethanol by 100. So kind of offset that. as you flow through that, they when we look at the demand tweaks in corn and the lower yield in beans, our carryout came out to 460 million bushels in the beans. That was a cut of 150 million. In the market estimated a 465 carryout, so we were pretty well on track there. 2.503 billion bushel carryout on the corn. The market expected 2.45, so we did get to 253 million bushel cut. But again, that nothing really jumped out. Sure, it was a cut. It's friendly, but these are still big crops. The USDA did also cut harvested acreage by 550,000 acres due to the Iowa windstorm. And so I think that was pretty well anticipated as well. And so nothing in here screamed that, hey, we got to go to $11 beans, but the funds still, here's a bean chart I'm showing. This gray box is, if I scrunch this chart up, kind of the previous highs and the previous contract high. And we paused for a couple days ahead of this report in this resistance area, but today just literally blew right through it, just shy of $10. $9.98 was our high today in the November contract. And this is still, going to be a big crop, and we're just at the very beginning of harvest. So really impressive action in the beans. And this move here from the August report, 2 days prior to the August report, a month ago, the low is 865 and a quarter. So actually, we're now $1.32 higher than we were 1 month ago in beans. That's you didn't see this straight up of a move even in 2012, the drought year. So it's pretty unprecedented. Funds now every Friday we get a CFTC commitment of traders report, shows us as of Tuesday where the fund position was. They were about 175,000 contracts long in beans. It's estimated they bought 20 to 25,000 since that point in time. So they're estimated to be just shy of 200,000 contracts long. The record ever for the funds was 2012 at 240,000 contracts. So we are getting into a little bit of rare air here as far as the size that the funds have gotten into this market. It doesn't mean that we can't keep going, but boy, it's an impressive run. And just doing some estimations here, this market will correct at some point in time. I'm not sure from what level, but a logical area, if it's close at hand, could be back here towards this 930 area. There's some retracements in this blue box here from basically 915 to about 935. The higher we go, you'd have to raise this up a little bit, but you could see a big correction and big volatility. We've seen that in other bull markets. Put a 60-cent break in beans and still maybe not have seen the highs yet, because we have to get through the upcoming South American summer, our winter, their summer, and there'll be, the whole weather game that we play as far as how their crops, how they get planted and what their growing season is. Real quick, Casey, here, I'll just show the corn chart as well. December corn struggled most of the day. Honestly, I think if it weren't for beans closing 20 higher, corn probably would have been lower on the day. But as long as beans are going to put the trajectory that they're on, you're going to drag corn along with it. And I think a month and a half ago, Casey, we talked about this as well. I haven't changed this much. This gray box here is where, some targets I have from the low, it's called about 372 up to just north of 380. I think if you see prices up in this zone, you really have to take a close look at things and say, hey, do we need to, be doing some risk management in this zone, making some sales, buying some puts, something. Because still, the USDA, even though they cut yields, that's still a record crop. And obviously, I understand the other side of that. There's the market saying, well, now in 30 days, when the October report comes out, are they going to cut yields another 4 bushels in corn, or are they close? So there is still some uncertainty in this thing, but it's been an awful nice rally. And again, if we're getting close to an intermediate term high in here, that 38 to 50% retracement zone is going to come back about 350 to down to about 344. And then this other box kind of drawn inside the bigger rectangle here is a gap that's in the chart back here from about 345 to 347, roughly. Actually, I think it's 345 and a half to 348. Yeah, 345 and a half, 348. That could be a logical target if we get some harvest pressure going in here. And, with shrinking carryout, shrinking yield, good demand, you still could see this correction back towards this gap. And then, an eventual rally into new highs later this winter or next spring. So with prices increasing, the volatility is likely going to increase. We're not going to go straight up forever. No market on back to this bean chart. You can talk about some massive bull markets in history, and not many of them go at this angle of ascent. There will be a correction at some point. It could be pretty swift and violent when it comes. And it's been great because it's been straight up, but it's not going to be that way forever, I don't think.
Yeah. Okay, so let me ask you a question. So if you look back go back to your corn chart real quick. And let's say that we have, they come out in the October report and they do ding it, 2 to 4 bushels an acre. What's that look like on your chart then? What could happen?
Yeah, I think that would probably warrant something, up here in the 385 to 390 plus range. Because, and maybe higher. Talked about the funds a little bit in the beans. They're getting to a pretty big position. Well, they're just now getting long in corn, so they've got some room if they want to throw some money and get long this corn market. A couple, 200,000-300,000 contracts would be getting up towards a pretty big long position size for them. That's enough to push this market a little bit. So they've got some room to do that. I don't know if they do it right now. I think it would take something like a further cut in October, and then you get the market thinking like, the dry weather in August really dinged us, and the wind damage from Iowa, and maybe this thing's going to just keep shrinking all the way to the January report. If they come out and they're unchanged in October, it's probably a different story, and we got 30 days to debate that, and that's a good thing. The uncertainty of that question you just asked, may be enough to keep this thing from falling apart, obviously, and keep people interested in buying this thing on the breaks.
Okay, so this morning, I was going to ask you this. I want to make sure I ask you this question here. So right now, 2 things have come out. So Brazil has farmers have sold off half of their bean crop, and they're just now starting to plant their bean crop. And then you've got Brazil's also still kicking that idea around of just scrapping tariffs temporarily anyway on soybeans and corn coming into the country. If they do make that full announcement, like, we're no more tariffs for the foreseeable future, we're going to just let that go. And then they have a kind of a hiccup down there due to drought and stuff that they're kind of running into already. What's your thought on the bean market just because of those 2 things?
Yeah, it could get explosive, and that's now with shrinking. Even if that's the last cut that we saw today, and that's going to be the final crop size, still big crops, still big bean crop, still a record corn crop. You have that uncertainty, right? And so it's just a different feel than 60 days ago when it looked like we had just literally massive record yields. It just quit raining. Had it kept raining, that keeps a little bit of the uncertainty out of this thing because of the big stocks we'd have. But that's shrinking, and that question will be there. If they have some sort of a weather problem down there, it could get really explosive on the beans, especially if China continues with the appetite that they're at. And I don't think that is sustainable, the pace they're on. There's only so much shipping capacity that we have to get not only beans, but all the other stuff that we ship out, corn, wheat, all the other stuff out of these ports. And so we're going to kind of tax the system a little bit. The other thing is a lot of this is right now. They've kind of filled up their October, fall, September, October, November stuff. They're working on like December, January type stuff. And then by February and March, you have those supplies in South America. So the window might be narrowing a little bit here. And eventually they're going to kind of have the maximum amount bought that they need from us. And then the real question comes, are they going to keep buying from us, clear out into the time slot that South American new crop supplies would be available? And if so, that's a new dynamic as well. Because typically in years past, you get, to January and that's it. They're not taking another bushel from us. They're getting it from South America. So any weather blip down there is going to be highly explosive potentially. And you mentioned parts of Argentina. It's a La Nina year that kind of trends towards maybe a little bit drier for them, especially Argentina. And so that could be something that's really crazy this winter. However, due to their currency, especially in Brazil, they're making massive money. That's why they have half their beans sold. They're making literally like 3 years of profits on this crop they're about to plant. They're going to plant a massive amount of acres, 3 to 5% more acres down there. And so they're going to try to respond to these higher prices and, way record profitability for them by planting fence row to fence row, so to speak. I don't know if they have fences in Brazil necessarily like we used to in the Corn Belt, but they're going to plant everywhere they can, and everywhere. So I don't want to throw cold water on it. We certainly it's a demand-led bull market. It's unlike anything we've seen probably in ever here. And it appears that China has an appetite that's real right now, whether that's, there's some well-published. They've had some storms that's damaged some of their crops. They've had insect problems. They've got the flooding to the south. So they have their own issues right now. And I think they really do need particularly the beans, but also, the corn to some extent. And it's good to see them in our market in a big way. I think maybe not to the extent. I think it's just lined up. The stars aligned. We have this trade agreement on top of a real need for them. I think if you throw the trade agreement out and replay this thing, they're going to be buying corn and beans from us anyway because they need it, and pork. Maybe not to the extent that they are right now. So we've got to hypercharge this thing. But it's a new wrinkle, right? 60 days ago, we thought, we're going to struggle to stay north of $3 corn, and we're going to $7.50 beans because we just got too much of it. Now we've shrank that crop size back, and that just increases the need for South America to come up with a big crop, and any weather problem down there is going to be potentially explosive. So that'll start, probably December, January, February would kind of be the equivalent of our summer time frame. I'd say kind of last half of January through February is kind of their August time frame in Brazil. A little bit later than that in Argentina. So we've got that fun to look forward to. We had our own weather market this year here, and I don't know if anyone likes weather markets. I hate them, but it looks like it's looming now. The snow might be blowing here, but we'll definitely be trading South American summer weather.
We had snow blowing earlier this week, so it wasn't. It was oddly enough, it's supposed to be like 95 degrees next week. So one week of cooler, damp weather, and then 95.
Yeah.
So there you go. Last question for you here. Kind of give me your insights on this. Summer driving season is over, and we have seen the price of oil start to slip a little bit because of that. Demand's down. With demand with cheaper oil becomes cheaper ethanol prices. And as you look at ethanol compared to corn, what are your thoughts moving in with ethanol moving into the last quarter of the year?
Yeah. This is a crude oil chart right here. This market just kind of went sideways to slightly grinding higher for a long time, 2-3 months in here. And it's what's that old saying? You take the stairs up and the elevator down. I mean, this was just, we fell pretty fast, pretty quickly in crude oil. $6, $7 in a short amount of time. So there are some issues in here. You saw them cut ethanol today by 100 million bushels. It's bounced back from the peak of the shutdowns during COVID, but it still is way under the pace we need it to be. And if this crude oil is a tricky animal, because you've got politics and all kinds of geopolitical things going on here outside of just simple supply and demand. If this is just a kind of pause before you head down here back towards 30, that's going to continue to crimp ethanol a little bit. If this is, hey, this is just support, and I haven't done this, I haven't looked at this, but let's see what the retracement is on this to find out. So isn't that interesting how that worked out? We pegged the 38% retracement and stopped so far. So if this is just a little correction, and we're going to go back up here and challenge the highs or get back north of 40 or going to new highs, that's obviously going to help. So this definitely is going to be an issue for corn going forward. Exports, you mentioned exports. They've been on just a rapid pace here. And that's good news. And a lot of that's going to China, obviously, on the beans, and they've taken quite a bit of corn as well. So that is a bright spot. But, this ethanol thing is definitely something that's going to be challenging going forward. And, I didn't want to talk about the winter and colder weather and what that may or may not mean to this whole virus deal. But it's definitely a concern right now. Like to see crude oil support here and kind of get back north of 40, and I think maybe that'll keep some profitability there, but it's definitely been hit a little bit in the last week or 10 days.
Right on. Well, good stuff as usual, Chip. What's if folks are working on a plan or just working on trying to keep things on the right path here, what's the best way for them to get a hold of you and ask questions about what's going on in the market?
Yeah, you can just give us a call directly at the office, 309-550-7213. And we'd love to chat with you. It's always critical to have a plan, but these markets move so fast, so quickly. You got to know what you're going to do before the market does its thing, because it doesn't usually stay there very long.
Very true. Well, I am Casey Seymour with Moving Iron Podcast. I'd like to thank Chip Nellinger for being a guest on this episode. Make sure you check me out on Facebook, Twitter, and Instagram for all the latest podcasts and blogs as they drop. Also, check out movingironllc.com for all the latest Moving Iron info on the Moving Iron Summit, as well as the Moving Iron podcast. Moving Iron Summit is January 20th through the 22nd, Nashville, Tennessee. Check out the website for all the latest information there. And if you're interested in attending, get on there, shoot me an email, and I'd be happy to give you the information on it. Chip, I ask a real quick question. How many of your producers you work with would like to have more information about what's going on in the auction market when it comes to their equipment?
Probably a lot. A lot. There's a lot of equipment moving, and having accurate prices, not like a market. You can't run to your screen and check what that combine is worth. So I think that would be useful information for sure.
Well, you can now, Chip, because Iron Comps is part of TractorZoom, and they have a new product out there called Iron Comp Insights, and the subscription is $299 a year. And if you use user code Moving Iron at checkout, you get $75 off. So if you're interested in what's going on in the auction market, an easy place to check out and see what's going on there, an easy way to track amongst about 400 and some different auctioneers and auction houses that are selling equipment every day. Check out Iron Comps Insights and get that subscription. Get $75 off when you use Moving Iron at checkout. So with that, I'm Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here.